Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 348. We will talk about the eighth wonder of this world. You all know that is compounding, and how you should embrace it, and how the non linearity of this entire game does not fit so well with the linear thinking of our brains usually. So, we will discuss some examples also and see how the non linearity of the market foxes us at most times. Markets, this is a Nifty index. We are still within the budget candle. It's been four sessions. Market is undecided which way it wants to go. We are not so far from a breakout if the market decides to go above 18,000. And if it breaks below 17,250, then 16,800 probably is the next major support. We have some gaps also down here, as and there are some more gaps below this as well. So, indecisive move. Last few sessions have been digesting the volatility of the budget announcements and the Adani Group saga that is going on. There's huge volatility in Adani stocks. Adani Enterprise has gone up like 80, 90% from the bottom. Again, Adani ports have done a huge movement, uh, and some of the other stocks that were hitting down circuits opened up today, but some of them again went back and went into a down circuit. Overall, the real estate was the only sector which pulled up a little bit today, 0.9% up. Bank Nifty was kind of flat. Private banks up 0.2%, public sector banks were down 0.2%. FMCG was the one sector which was dragged down. ITC dragging down the FMCG index. There is talk of government wanting to get rid of its ITC stake, and that will have an overbearing on the supply. Autos also slipping 1%. Commodities, uh, metals, consumption stocks. It was a very lethargic sort of day where the indecisiveness of the index also was seen across sectors. You can see all across the board, the broad indices were down from 0.13% to 0.37%. And within weekend investing strategies, also barring a few strategies which were in the 0 to plus half percent mark, others were below 0 to minus half a percent or minus 0.65%. Nothing exceptional day. ITC, as you can see, deep red there. Tata Steel was not very impressive with its results, minus 5% on that. Hindalco down 4%. So this reopening trade of China hasn't worked, and the results are, splash of water on that. Maruti down 1.6%. HCL Tech, Wipro all down. Kotak Bank was the one which was standing out. And of course, there was huge movement, as I mentioned, in Adani Enterprise, which was closed up at plus 14%. Levers and ITC dragging the FMCG sector down. So, coming to the topic of the day, the eighth wonder that you should embrace is that, I mean, most people are wired to think linearly in their mind. So, if you know you have seen a growth of 20% in the last year, then you expect that the next year will be 20% and the next year will be 20%. So our journey of 20 years will be 20 20 20 20 20, which HDFC Bank can do somehow, but not everybody's investments are able to match that. The stock price, of course, of HDFC Bank also will not match that, but their profits do that. So, what usually happens is all kinds of movements, exponential movements, sharp drops, unexpected movements happen, and that disturbs our sense of expectation that we have. So, our expectation is that we get a linear return from the market, and it is a bit of a naive and immature expectation, but most people have that expectation, that we'll make 15% every year, especially when they come to the market after a bull run. The next few years really, uh, you know, are a washout in terms of that expectation not going through. And then when most people who have come in new to the market are totally and thoroughly disappointed with the market, that I've spent 2 3 years and things are not moving and I've lost 20% or whatever that amount is, and I was supposed to be up 60% in the last 3 years, but I am at minus 10. So this is not the right game. And the day you move out of the market, the next year is plus 60%, the next year is plus 50%. It has happened time and again. I mean, if you go back in history and see how stocks and indices move, they move in a very lumpy fashion. And not just stock markets, any asset market you see. I mean, if you have uh, seen the real estate market, if you have witnessed the gold market in the last 20 years, let's look at real estate market. Most areas, I'm aware of NCR area, I'm not sure about others. NCR moved from NCR made a real estate high somewhere in 96, 97, and then there was a lull from 96, 97 till about 2002, 3. 6 years, nothing happened. And then 2003 onwards, it started going up. Until 2012 or 13, real estate was on fire. Everything went up like 4, 5x. And slightly lesser developed areas went up 10x, some even maybe more. Since 2013, the real estate market in the NCR region plateaued. And very recently, in the last few years, mature parts of the NCR market moved a little bit, and new growth areas like Gurgaon, maybe Ghaziabad, Faridabad, these have jumped a lot, almost like small caps. These have jumped hugely, but in very lumpy fashion. Suddenly, there has been move of 60, 70, 80%, which had not moved for almost 8 or 9 years. So this is a phenomena you will see in every market. The time frames may differ, but the phenomena remains the same. Gold also, you can see gold was 5,000 rupees per 10 grams in 2003 4, and then it went to 30,000 by 2011 or 12, if I remember correctly. And then it stayed between 30,000 and 25,000 till 2016. From 2016, it started to slightly rise. So the range became between 28 and 32, 33. And now suddenly in the last couple of years, it has gone from 32 to almost 60,000. So these lumpiness and non-linearity in the way the returns will come will always remain. So let's see how this manifests when you are doing, let's say, a monthly SIP. Let's say you're doing a monthly SIP of 10,000 rupees and you do it for 2 years. Let's let's say you get an expected XIRR of 15%, and you are topping up your SIP by 5% at end of every year. So first year is 10,000, next year is 10,500, and so on and so forth. So you reach a future portfolio value of 2.91 lakhs. Then, if you were to extrapolate that over 20 years, and of course, we are still assuming we are able to get 15% XIRR, you reach a value of 1.8 crores over 20 years. Over 30 years, it becomes 8 crores, 8.19 crores. Over 40 years, it becomes 34 crores. Over 50 years, you talk about 141 crores. It may or may not be possible to keep doing this over a period of time, but there are enough investors globally who have done this, achieved it, and shown us the power of doing that same process over a very long period of time. Now, a lot of people will scoff at this, that how can you get 15% and what is inflation impact in this and taxation and this and that. So you can choose a number which is more convenient to you, but the results will remain the same in the sense that the exponentiality of the gain is not easy to, you know, grasp in our mind. I mean, it's very difficult to think about it even over a 20-year period, forget 50-year period. uh, you know 10-year, 15-year, 20-year period is also a very long period if you are able to do successfully a process which gives you a better than inflation returns. So let's take some examples here. So I've chosen Aarti Drugs as one of the examples. This is one stock that we rode in the last few years. And you can see here that this was trading at a very, very nominal between 0 and between 10 and 30, 40 rupees for almost a decade. And then from about 20, 30 rupees, it went 10x within a span of 1 year, roughly about 1 year, 15 months. So no returns for almost a decade and then 10x within a year. Is that not a classic example of non-linearity which nobody in this 10 years would have been expecting, right? I can bet 90% of the people, as soon as it broke the all-time high at 30 rupees and you've been stuck for 10 years, you would sell out. कि बहुत हो गया. Let me get out of this and let me go buy some other promising stock. This has by chance come to my cost after 10 years. I'm getting out of it. And that is exactly the setup where most people will get out, and new buyers who would have come in watching that momentum, and they would ride that some part of this rally going from 20 to 200. And then once again, when the momentum has taken its toll on other investors, now it's time to rest again. So 2015 till about 2020, almost 5 plus years. Again, between 200, 100, lot of choppiness, so on and so forth. And then post COVID, again 100 to 1000, again 10x within just about again 15 months. So, twice in the last 20 years, this stock did a 10x in 15 months each time. And post that 10x, again you are seeing a 60% drop. So the idea is that we want this to be linear, like this, going from 20 to 400, but it is not like that, because that, I mean, life of stocks and life in the market is lumpy. So what we need to do is to embrace the fact that this will happen from time to time, and this will also happen from time to time. Flatness, choppiness, drawdowns. But this will happen from time to time, and we have to wait for that. And your setup and your process should be ready for that, to accept this when it happens and not reject it when it happens. If you're going to get out at 30 rupees after waiting at 20 rupees for 10 years, then there's no point of waiting for 10 years also. You're not playing the right game then. So these kind of examples tell you that you don't have to try and catch the bottom, catch the top. You make some 3 4x here, you made 3 4 5x here, that's good enough. If you made 5x there and 5x there, you made 25x on your capital towards this stock only. And what has the entire journey been of somebody who's sitting for 20 years? He's not made 25x. But you will come here and make 5x, you will come here and make 5x and get out of it and not have anything to do with the stock once the move is done. Same thing happened in Wipro. Wipro went from 10 rupees to 400 rupees, almost a 40x ride in 2 years in 98, 99. And then people got out of it. Maybe, losing some part of the drawdown of the down that came here, but still made 5, 10x, 20x here, got out of it. And for the next decade, nothing happened for them, those who got stuck. And gradually, it came here. And then again, it did a 5x here. So if you were able to get 10x out of here, another 3, 4x out of here, that's good enough. Why would you suffer for 20 years sitting with this stock, waiting for this to happen and then not able to get out when the drawdown comes? This is also very true that there will be people who saw this entire thing go up and saw this entire thing come down, and once it did not go up for several years, they were ruining the fact that why did I not sell somewhere anywhere here, because they were married to the stock. And once this move came, you were wanting that this move will continue every year, so in 5 years I will beat Mr. Mukesh Ambani, so let me stay on with this stock. So we need to learn from the markets itself. The market is giving us a lot of lessons. We will go wrong sometimes also. We will have blunders. We will lose some money also. But largely, if your process is right and you are able to ride winners and cut losers, you will be doing very well for yourself over time. So, as a conclusion, markets don't work linearly. Most of the gains or losses in a year will come in less than 8 weeks of the year. So, that is also somewhat like Pareto's rule, where 80% time will be, 20% of the time will make up for most of the 80% time that you are doing nothing. And once a stock starts to accelerate, and when does it start to accelerate? Once it makes a new high, new 52-week high, new all-time high. That is when it is like a free bird. There is no resistance above it. That is where you should be watching with a hawk's eye, and maybe you can add your intelligence of fundamental investing and so on and so forth to that technical aspect of it becoming an all-time high. That, does this stock have a potential to go 5x from here? Does this stock have a potential to double from here? And most of the time, if you are very well read about that stock, even company insiders, they are not able to fathom what kind of levels our stock can go to. Even promoters sometimes don't are not able to discover, or discover is the wrong word, not able to imagine where my stock can go, because it is the mind of the market. The market is taking up, let's say, auto parts segment to 40 price earnings. Promoter was sitting at 10 in his mind, that okay, 10 I might go to 20 someday. If the market is euphoric, market may become so euphoric it may take it to 100, as you have seen in many of the stocks that you've seen. Maybe the promoters never realize that this kind of uh, at least temporary market cap can be achieved. So what the market can do, both ways. Market can take you to the moon, and market can take you to hell also. You can keep calculating what is the cash flow and what is the sum of parts, but the market may say that I'm taking you to one fifth of that level, and you can keep doing your calculations in Excel. I'm not coming back for the next 5 years. It is possible. So that's all the I had for today's uh, daily bite. Thank you so much for listening to all these daily bites and sharing with your friends and family. I hope you're doing that. Uh, as is my daily routine, please also know, if you have not done so far, is to focus on, whenever your renewal comes, please use this weekend investing wild code. This is a loyalty discount program. This is one of the first such programs by any small case manager. We let you have an increasing discount when you are renewing your subscription in subsequent years. So it works like the auto car insurance. First year, second year, third year, that keeps going up. and you can also use the same offer for any other weekend investing strategy in the first 30 days of your renewal. So thank you so much for watching this, and I'll see you in another video. Bye.